Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Thursday, the 7th of June, 2018, just after 4 p.m. Central Daylight Time. Settlement prices are in. And we had a bit of a correction today in the Russell and the NASDAQ. They'd gone so straight up. Why not? They have not changed anything in locking in the momentum. It is still bullish as can be. Coming to the party for a change is the Dow, and right behind it, pretty much unchanged on the day, was the S&P. Now the dollar down a little, and we did have a rally today in the notes and the bonds. That's not a surprise to me because next week we have the FOMC meeting, and if you look, and you'll see it in a minute, both the note and the bond went down to the 18-day average of closes, fell from a big rally all the way down there, got its footing, and bounced away. Exactly what I teach in my charting course. Now, what we have tomorrow, and it will impact the weekend, of course, is we have the G7 summit where the president leaves tomorrow for that. Our trading partners will be there. It is really the G6 plus us. That's the way to look at it because we are the enemy. We are the people that are saying we're not being treated right. We're not going to stay in these trade deals. And that's how it is. There is no foreign leader there that isn't going to be leaning on the president and saying, you should not be putting tariffs on us for this, for that, blah, blah, blah. And his story is going to be the same as it has been. You shouldn't be taking advantage of us in trade. Let's find a middle road, and nobody wants to. Whether you read it or not, I do. I read the news. I have not seen any of our trade partners come back other than to say, really, you know, it's been this way. Why are you rocking the boat? Rock the boat. That's what's going on. Stock market doesn't seem to care. It keeps going up. I read stories just like you do. There's so many people calling tops in these markets, giving you all the reasons why it's doing it. I don't know. It's, you know, I can understand the summertime blues, but as I said early on this year, I think you'll end up with a small gain for the year. We'll see if that turns out to be. You're not there now, that's obviously. And it's not a trade recommendation. It's a flip of a coin because there's so much that can go on. But as I look at it, we're over the 18-day average of closes, just staying where we're at. If you go back and you look at where the year began, we're a bit down in the S&P. As you take a look at the market here and we come back, and you can see when I say that we're down, you were way up here at the beginning of the year. That was that monster break we had at the end of January, and the market was way up near the 2,900 level. And we've clawed our way nicely back off the lows, but there's nothing here to write home about other than you have an uptrend. You've got higher lows, higher highs. That's bullish. The market is over the 18-day average and the 100-day average. It had several tests of the 200-day moving average, and boy, when it was down there, newscasters, newspapers were full of, is this where the market's going to collapse? And it could have been. And I realized the 200-day average is super important, but you're far away from it. So what I'm going to do is just take it off the rest of the charts because we're nowhere near it. Why should we complicate ourselves? You now have a day over the upper Bollinger Band. You can see that right here. And yesterday you had it, not the day before. Now, is it a breakout becomes the question, or is the market just pushing out the band and going to pull back within it? Can't answer it for you. What I can answer is that momentum is trying to embed. Now that's where it gets exciting to me. Embedded means you take a market that is either overbought or oversold. If it's on the top side, the numbers are over 80, it's overbought, converting to locking in a bull trend. Both numbers today are over 80. Yesterday, both numbers were over 80, not the day before. You need to get through tomorrow in order to do it. So the odds are you're now just in an overbought condition, up at resistance, and the odds favor the market will try to pull back into those bands. That's all that it is. In the NASDAQ, you have the embedded reading. Until the red line closes under 80, I would expect that on pullbacks to see buying. Now, we had an outside day down today. What else did we have? If we go to yesterday, we were over the upper Bollinger Band. You were over the band the day before. You were over the band the day before and the day before. You had 4 days in a row. Go to yesterday's tape. Now, I'm not predicting the markets. I'm telling you what often happens. I have done enough studies to come to the rule of thumb point of view, where each consecutive day over, consecutive takes away one of the 5 percentage points of the Bollinger Band percentage that the market will trade above or below the band 5% of the time. The number falls. That's all that it is, that the number will pull back within it. I'm not saying it calls a top in the market when it pulls back. You're not hearing any of that. This is what I use for the momentum. Is it going to stay bullish or bearish? And right now, I view the market as on breaks being bullish. It has corrected a condition where it was excessive, and it still is a locked-in trend. The Dow does not. It's clearly overbought, not embedding, not even close to it. First day over the upper Bollinger Band, so that puts it in what I call a bit of an excessive area. I'm watching closely how the 18 and the 100-day average are coming together in sideways action. So yes, I have a bullish bias because the market's over the 18-day average. Yes, the trend is up because you have a pattern of higher highs, higher lows. But you've hit your upside target yesterday, you're hitting it again today, and you are overbought as can be. Support back 24,804 to 24,781. In the Russell, like in the NASDAQ, these were the leaders on the way up. With the NASDAQ, really, when the techs caught on fire, everything went crazy. And now the market got its correction. It went to the upper Bollinger Band, closed over it, I believe, yesterday, and now the market is what? Correcting back under it. That's all that it is. It's still very much in an uptrend. There's still support in the market on breaks, and until you lose the red line under 80, I remain in the bull camp. In the VIX, I was telling you that I wouldn't be surprised if the pros, if you hit the lower Bollinger Band, would write puts. Not a trade recommendation. I want to be ultra clear. I'm giving you observations here. You want my recommendations? They're in my market research. But what I had said is I thought that's what they would do, and then if the market goes back to the 18-day average, they'd cover, just the way that they probably wrote calls here. I can go back and forth, and it's something I'm observing right now. Here, if you wrote a put. Now, when you write puts or calls, is there a lot of risk? Oh boy, what if this happens? The answer is yes. And when a call or a put moves against you, you're going to discover, unlike a futures contract, there's vacuums in there at times. So I am not saying this is for anybody but the faint-hearted, well-heeled, and I am not making it a recommendation, period. Observation is very different. So it didn't quite get there. It got to 1122. The 18-day average is 1346. We got to 1328. Could be that this is where the market gets to the 18-day average to figure out what to do. Volatility, if you'll notice, is out of the market again. And that goes hand in hand with the stock market acting overall so bullish. We get to the T-bonds. This is yesterday's action. Lower highs, lower lows. I'd said, and I'm sure of it, I wouldn't be surprised if we get to the 18-day average and the market looks for support there. Goes to the 18-day average and soars back up. Okay? And it's soared enough to take out a previous high. There's no trend, which is pretty much what I thought was going to be the way that we go into the FOMC meeting. There's still another, 4 days or so, but this is what I was looking for. I can now call that neutral. The same thing happened in the note market. I say that they've gone back to that line in the sand that they so often do, be it from a low point or a high point, and they regroup, and that's what I think is going on. What about TLT? It did it yesterday. And we were talking. Now I said, well, it's in a downtrend, and if you take out this high, and that high was specifically 120.16, you negate the downtrend. It's exactly what you did. By the way, the market just held right there, the key area. You got momentum down, bias up, no trend. The Treasury part of the markets seem to have flattened out. In the dollar index, you're very much in a downtrend that is oversold. Will it reach for the lower Bollinger Bands? The question. You've had a nice size correction. You're in a downtrend with downside bias. That's the question. Will it get down there? In the euro currency, it's the mirror image. Flip-flopped. You've got the market overbought in an uptrend. Will it get up there, or is it going to pull back to the 18-day average and sort of sit as it waits to get more information? Wouldn't surprise me if that's what both of these do. In the British pound, we're having an outside day up at a crucial spot on the chart. You've got the higher lows, higher highs. You closed out with the market settling over the 18-day average of closes with an outside day up. If today's low is taken out, the odds favor that this was a false run-up, and you could even be going back to the lower Bollinger Band. If the market's good, it should not get back under that low. At least this is my opinion because of the outside day, and possibly it makes a run to the upper Bollinger Band. Got to wait and see. But the bulls took over control of the market today as I define these individual parts of the market. In the Japanese yen, the market is neutral as can be. Hanging day after day now at the 18-day average of closes. The pattern is a higher high, lower low. Even momentum is now turned sideways. It had been pointing down. In Bitcoin, when you lost the embedded reading back here, you so often get these, I was looking for price and the 18-day average to make a run at each other. You had one run, got pretty close today, didn't it? And that's all that I'm looking for. You'd have to close over that 18-day average to say, okay, now you can be bullish. Right now, that's a resistance point. So the chart's got nothing according to, think of a pilot. I used to fly an airplane. And before I take off, there's a checklist. You don't want to check it in the air. Everything's on the ground, right? And as you check it, you make sure before you put on a trade. Well, the swing line's up, momentum's up, but you're under that 18-day average. There's really nothing to do there. August Brent versus WTI crude. Today it gained again. Why? Did you not hear the words, we're going to put even more sanctions on Iran coming out today? I did. It was on the news one more time, and it had to do with, if you wait till you see what's going to happen there, and they're feeling the pain. I mean, the president was talking again, and this is how I'm reading it. And whenever he's doing that, we have so much crude coming out of the ground that I just heard. You have any idea what they were saying a truck driver in Midland is making? It's over $100,000 a year. Don't get me wrong, they deserve every penny. But homes cost a fortune, going out cost a fortune. It's a boom area. The Dakotas are becoming a boom area. There is a problem in America. We are out of pipeline space. We have to have a better way to move this oil to the ports, and at the ports they have to be re-engineered to handle these monster tankers. So we have a problem. This oil boom isn't going away anytime soon, and people should pay attention. But that's one of the reasons this is going crazy. We're waiting to see if OPEC will do as the president requested of Saudis, that is, pump some more oil to make up for the loss of oil out of Venezuela, and I think you can count the loss of oil out of Iran. And as you look at July Brent, you've been in a downtrend. In fact, this market's not showing anything other than coming down under the lower Bollinger Band, sort of a dangerous area for this market now, so I'd be a bit careful there. When we come over to WTI, you can see what it's doing, getting a bit of a bounce. When we come to the gasoline, by the way, there's something not right here. There's no July Brent right now. I think that I've got something wrong there. I should be on the August Brent for that for you. And the WTI, you're holding the 100-day average. It's okay. A spot where it's finding support. Gasoline went right to the Bollinger Band, all of a sudden finding support. The question I had yesterday, would it make a run to the 100-day average? It's also oversold as can be, trying to embed, hasn't succeeded in doing it, and that gas is now narrowing in, and all the action is trying to take place over the 18-day average. It's got a bullish bias until it gets back under 287.30. That would give it a bearish bias again. Bulls have control, and what are they hoping for? Hot weather. That's what I'd be doing. So pay attention to all that. Now, let me tell you something I've done. See this word three-part video series? On the pivot points, I had done 2 of them, and I think you all know that. I did them probably towards the end of last year, and I promised to get a 3rd one done where I show you how to use momentum on the 3rd one. I've done it. We put it up today, so you can't tell me you've seen it. You haven't seen it. And what I did is I married slow stochastics, the way that I understand them, with pivot points to give you an idea as to how I think the in and out traders, we're talking 15-minute bar charts, how they're looking at pivot points during the day. To be able to get access to it, go to our website or call our staff. You'll sign up for the pivot points. It'll take care of it right itself. You can click up here to get to that page, by the way, if you're watching me on YouTube. Or underneath us, it says click here for Ira's free information. Do so. We'll put it in your hands. I'm Ira Epstein. You have a good day.